Welcome back to Talk Tickers. We're your shortcut to earnings call insights. And today we're going to be diving deep into Deere & Co.'s Q4 2024 performance.
Yeah,
It's a story of resilience, honestly,
it is.
in the face of a pretty challenging market.
Yeah.
So overall, Deere delivered better than expected numbers in Q4, clocking in with a 13.1% operating margin for their equipment business.
Right.
But the real story, I think, is how they're navigating this shrinking market.
Yeah.
Especially in their core agricultural segment.
Yeah.
You've got some pretty interesting details to unpack today.
For sure.
Like their laser focus on inventory management, their bet on cutting-edge technology, and a surprisingly strong performance up north in Canada.
Yeah, you're right.
And of course, stick around for our This Is Not Financial Advice segment, where
Yeah.
we'll throw out a wild trade idea inspired by today's deep dive.
All right. Well, what's remarkable is that Deere managed to pull off an impressive 18.2% operating margin for the entire year. That's a significant jump from 2020.
Yeah.
The last time the agricultural market was at a similar low point.
Oh.
It suggests that Deere has learned from past cycles and honed their ability to weather these downturns.
Absolutely. Deere's CEO, John May, even talked about how their employees are dedicated to helping customers do more with less in these challenging times.
Yeah.
It's a powerful message that resonates with farmers facing these uncertain conditions.
For sure.
But let's get into the specifics of this ag market slump. Deere's forecasting a nearly 30% decline in North American large ag equipment sales for 2025.
Right.
It's a pretty steep drop.
This contraction is fueled by a combination of factors, including weak farm fundamentals, persistent high interest rates, and a glut of used equipment in the market.
A perfect storm.
It really is.
It sounds like it. But here's the kicker. Deere seems to be handling this inventory challenge better than most.
Yeah.
They've got their inventory to sales ratio for large tractors, those 220 horsepower, and above down to a record low.
Deere's approach to this is a stark contrast to the rest of the industry.
Yeah.
Which is grappling with inventory to sales ratios that are literally double what Deere is reporting.
Wow.
Their smart industrial operating model, which they rolled out in 2020, seems to be paying dividends. It emphasizes leveraging technology and data to optimize production and respond to market shifts more effectively.
So they're not just building tractors, they're using data to predict what farmers will need and when.
Exactly.
That's pretty clever.
It's about anticipating the ebb and flow of demand. In fact, Deere even took the step of temporarily shutting down some production lines in Q4.
Really?
It might seem counterintuitive, but by proactively managing inventory now,
Right.
they're aiming to prevent even bigger problems down the road. It's a long-term game.
Makes sense. But it's not all doom and gloom, right? You mentioned something about a bright spot in Canada.
Oh, absolutely. Deere's actually seeing significant success in the Canadian market.
Oh.
Their smart industrial redesign is resonating strongly with Canadian farmers, especially their focus on integrated solutions that go beyond just individual pieces of equipment.
So what does that look like in practice?
Think of it this way. Deere isn't just selling a combine, they're offering a whole system.
Okay.
Corey Reed, who leads their global agriculture division, talked about how their packaging X9 combines with 9RX tractors and a suite of integrated technology solutions tailored for Canadian farmers.
Wow.
It's about providing a seamless, interconnected experience that boosts efficiency and productivity.
That sounds like a pretty compelling value proposition for farmers.
It is.
Especially in a tough market, having tools and technologies that can help them do more with less becomes even more critical. But let's be honest, we can't ignore the elephant in the room.
Right.
That mountain of used equipment piling up, it's a major headache for the entire industry.
Yes. The used equipment market is a significant challenge. Deere acknowledges that bringing down used equipment levels, particularly for late model harvesting machines and tractors, is a key priority moving forward.
Why is this such a tough nut to crack?
It's a classic trade-up dilemma. Think of it like a ladder. Farmers typically trade in their older equipment when they purchase new machines, but with high prices and interest rates, those second owners who usually drive the used market are holding back.
Oh.
It's created a bottleneck in the flow of used equipment.
So what's Deere's game plan for tackling this used equipment glut?
They're taking a multi-pronged approach.
Okay.
First, they're carefully controlling new equipment production to avoid further flooding the market.
Okay.
Second, They're working closely with their dealers to offer targeted programs that meet the specific needs of customers who might be hesitant to buy used equipment right now.
Hmm.
And finally, they're increasing their pool fund contributions, which gives dealers more flexibility to offer competitive financing options on used equipment.
It sounds like they're pulling out all the stops to get this used equipment moving again.
Yeah.
But let's shift gears for a moment and talk about Deere's construction and forestry business.
Okay.
What's the story there?
Well, 2024 was a bit of a roller coaster for that segment. Demand was strong in the first half of the year, but things started to soften in the second half. It echoes the pattern we're seeing in agriculture.
Yeah.
An initial burst of activity followed by a pullback as economic uncertainty sets in.
So how is Deere responding to this slowdown in construction and forestry?
They're applying the same proactive approach we discussed earlier. Deere is actually choosing to produce fewer earth-moving machines in Q4 2024, and they plan to continue the strategy into the first half of 2025.
Wow.
It's a strategic move to avoid having excess inventory if demand continues to soften.
So they're taking a hit on near-term margins
Yeah.
to position themselves for a stronger rebound in the future? It's all about that long-term vision.
Exactly.
But speaking of the future, Deere's technological advancements are a consistent bright spot.
Yeah.
They're seeing some remarkable adoption rates for their latest tech, especially in agriculture.
Absolutely. Their harvest settings, automation technology, for instance, is proving to be a game changer.
Yeah.
Over 75% of farmers who pre-ordered combines opted for the highest level of automation.
Wow, that's amazing.
It's a clear indication that farmers are eager to embrace technology that can help them improve efficiency and productivity.
That's a huge vote of confidence.
Yeah.
Farmers are willing to invest in technology even when times are tough.
Right.
It speaks volumes about the value that Deere's innovations are delivering. What are some other examples of these technological advancements?
Deere's Engaged Acres, which is a measure of how much farmland is being managed using their technology, grew by almost 20% in the past year, reaching a staggering 455 million acres globally.
Wow.
And even more impressive is the growth in highly engaged acres, which are those using Deere's most advanced features.
Right.
This segment is growing even faster, suggesting that farmers aren't just dipping their toes in the water, they're diving headfirst into the deep end of precision agriculture.
It's amazing to see how technology is transforming the agricultural landscape. But before we get too carried away with tractors and combines, let's bring it back to our Talk Tickers listeners.
Yeah.
What are the key takeaways from Deere's Q4 earnings call?
Well, despite facing a challenging market, Deere exceeded expectations for Q4 and delivered a strong full-year performance.
Yeah.
They're anticipating further contraction in the ag and construction markets, but they're proactively managing inventory to mitigate the impact. And their investments in technology are clearly paying off, as evidenced by the strong adoption rates for their advanced solutions.
All right, so we got the serious stuff out of the way now. For the fun part,
Right.
it's time for our This Is Not Financial Advice segment, where we'll cook up an outrageous yet plausible trade idea inspired by Deere's earnings call.
Remember, folks, this is for entertainment purposes only.
Yeah.
We're just playing around with hypothetical scenarios here.
Yeah.
Don't mistake this for actual financial advice.
Okay, let's get speculative. Deere's stock price jumped over 8% after this earnings call, hitting a new 52-week high of $442.05. What if they announce a surprise stock split in the next quarter? Could that send the price even higher?
It's not entirely out of the realm of possibility. Stock splits can generate buzz and make shares more accessible to retail investors, and Deere does have a history of stock splits, the last one being back in 2007.
Okay, so here's our wild trade idea. Buy Deere call options with a strike price just above the current market price and an expiration date a few months out. If the stock splits and the price surges, those options could become incredibly valuable.
Of course, this is a high-risk, high-reward play.
Right.
If the stock doesn't split or if the price doesn't move as anticipated, those options could expire worthless. But hey, that's the nature of speculation, right?
We're just brainstorming here, folks. Do your own research, consult with a financial professional, and remember, this is not financial advice.
Right.
We're just two podcast hosts having some fun with market hypotheticals.
And with that disclaimer firmly in place, let's pause here. Be sure to tune in for part 2 of this deep dive, where we'll explore even more fascinating insights from Deere's earnings call. Welcome back to Talk Tickers. Before the break, we were discussing Deere's impressive performance in a challenging market. One thing that really stands out to me is their commitment to technological innovation.
Right.
It's not just about, creating flashy gadgets.
Yeah.
It's about addressing real-world challenges faced by their customers.
You're right. They're not just building bigger and better tractors.
Right.
They're developing technologies that can help farmers do more with less.
Mm-hmm.
For example, their See and Spray technology is making waves in the agricultural industry.
It is.
It allows farmers to target weeds with pinpoint accuracy, reducing herbicide use and minimizing their environmental impact.
It's a great example of how Deere is combining innovation with sustainability.
Yeah.
They shared that See and Spray was used on over 1 million acres in 2024.
Wow.
And they're expecting that number to explode in 2025 as orders surge, and they're exploring new business models like paper use to make this technology more accessible to a wider range of farmers.
That's a smart move. Not every farmer can afford to make a huge upfront investment in new technology, especially in a down market, by offering flexible options like pay-per use. Deere is making it easier for farmers to adopt these solutions and reap the benefits.
It's a win-win situation.
Yeah.
Farmers get access to cutting-edge technology that can help them improve their bottom line, and Deere expands its reach and deepens its customer relationships.
Speaking of customer relationships, Deere's deep understanding of their customers' needs is a key factor in their success.
Absolutely.
They're not just throwing technology at the wall and seeing what sticks.
Right.
They're listening to farmers, identifying pain points, and developing solutions that address those challenges head on.
Exactly. They're not just selling products, they're building partnerships. It's a customer-centric approach that fosters loyalty and trust.
It's a powerful testament to the idea that innovation isn't just about technology, it's about people. And speaking of powerful, we can't wrap up this deep dive without revisiting our This Is Not Financial Advice segment.
Right.
We've already explored one outrageous trade idea based on a potential stock split.
We did.
Ready for another wild scenario?
Absolutely. Remember, folks, we're just having some fun here, exploring hypothetical situations.
Yes.
Don't take this as actual investment advice.
Okay, let's say Deere announces a major acquisition in the next few months.
Yeah.
Something that significantly expands their reach into a new market or technology.
Mm-hmm.
What if they acquired a leading robotics company, for example?
Ooh. I like where you're going with this.
Yeah.
Imagine Deere combining their expertise in agricultural equipment with cutting-edge robotics technology.
Right.
It could revolutionize farming as we know it.
Exactly. Think about autonomous tractors that can plant, fertilize, and harvest crops with incredible precision.
Wow.
It's like something out of a science fiction movie.
It is.
And if Deere makes a move like that, their stock price could go through the roof.
For sure.
So here's our outrageous trade idea by Deere Call Options with a strike price significantly higher than the current market price
Okay.
and an expiration date several months out. If they pull off a game-changing acquisition, those options could be worth a fortune.
Of course, this is a highly speculative play. Acquisitions are notoriously unpredictable, and there's no guarantee that Deere will make any big moves in the near future. But if they do and the market reacts favorably,
Right.
those options could deliver massive returns.
Again, this is just a thought experiment. Folks, do your own research. Talk to a financial advisor. And remember, this is not financial advice.
Right.
All right. That's enough speculation for now. Let's shift back to the reality of Deere's current business. Their performance really underscores the resilience of the agricultural sector.
It does.
Despite facing numerous challenges, farmers continue to find ways to adapt and innovate, and companies like Deere are playing a vital role in supporting those efforts.
It's a reminder that even in the face of uncertainty, there's always room for growth, progress, and technological advancement.
Deere's story is an inspiring example of how a company can navigate challenging times by focusing on innovation, customer relationships, and a long-term vision. But that's all the time we have for this part of our deep dive into Deere & Co.'s Q4 2024 earnings call. Be sure to join us for the final part, where we'll wrap things up and leave you with some final thoughts. Welcome back to Talk Tickers, where we break down complex earnings calls into bite-sized insights.
Yeah.
We're wrapping up our deep dive into Deere & Co.'s Q4 2024 performance.
Right.
Before we get to our final This Is Not Financial Advice segment,
Okay.
let's zoom out and think about what Deere's success means for investors like you.
Well, Deere's performance really highlights the potential of companies that are deeply entrenched in essential industries,
Hmm.
like agriculture. I mean, they're not just selling equipment. They're providing solutions that contribute to feeding a growing global population.
Yeah,
That's a powerful investment thesis.
absolutely. And they're doing it while embracing innovation and sustainability, which are becoming increasingly important to investors. Deere's commitment to developing technologies that improve efficiency, reduce environmental impact, and enhance food security makes them a compelling option
For sure.
for investors who are looking for both financial returns and a positive impact.
It's about aligning your portfolio with your values.
Yes.
Deere is a prime example of a company that's well-positioned to benefit from long-term trends that are shaping the future of agriculture and construction.
Okay, before we let you go, we can't resist one last round of this is not financial advice.
All right.
We've had fun speculating about stock splits and acquisitions.
We have.
Now let's get really wild.
Okay.
Remember, folks, this is purely for entertainment purposes.
Right.
We're just two podcast enthusiasts brainstorming crazy scenarios. Always do your own research, and don't mistake this for legitimate financial advice.
Got it.
All right, imagine this Deere announces a groundbreaking partnership with a major tech giant, let's say Microsoft.
Okay.
They join forces to develop cutting-edge artificial intelligence and machine learning applications for the agriculture industry. Now, that would be a game changer.
Yeah.
Picture AI-powered tractors that can optimize planting fertilization and harvesting decisions in real time, adapting to changing weather conditions and soil variations. It could revolutionize farming practices and boost crop yield.
Exactly. And if this partnership comes to fruition, the market could go wild for AI-powered agriculture.
Yeah.
So here's our outrageous trade idea. Buy a Deere stock and simultaneously buy call options on a leading AI chip maker like NVIDIA.
It's a high-risk, high-reward play, but that's what makes it exciting.
Yeah.
Of course, there's no guarantee that this partnership will ever happen,
Yeah.
but it's fun to imagine the possibilities, right?
Absolutely. We're just trying to spark your imagination and get you thinking outside the box. Remember, this is not financial advice.
Right.
We're just two podcast hosts having some fun with market hypotheticals.
So with that disclaimer firmly in place.
Yeah. Let's wrap up our deep dive into Deere & Co.'s Q4 2024 earnings call. We covered a lot of ground today, from market trends and inventory management to technological advancements and growth opportunities. We hope you found this episode of Talk Tickers informative and engaging.
And remember, knowledge is power. The more you understand about companies and the industries they operate in, the better equipped you'll be to make informed investment decisions.
Be sure to subscribe to Talk Tickers for more deep dives into earnings calls and other financial news. And don't forget to share this episode with your mellow investors and finance enthusiasts.
Until next time, happy investing.